Hello, this is Manesh Patel with ichimokutrade.com and Alerts Trades. I want to welcome everyone to 2017. Having a happy new year. Today is pretty much the first workshop for 2017, and we typically go for a new product launch at this time. This workshop is a very special workshop, and you can see the title. It basically says Multiple Time Frame Analysis at One Glance. As you guys know, we've been using Ichimoku, which means at one glance, to simplify trading. With Ichimoku, a lot of people have been able to determine a sentiment right away within 1 second by just looking at price in respect to the cloud. In the last couple of years, we've been basically going down a journey to simplify every aspect of trading. So the first aspect of trading that's been simplified using Ichimoku was a sentiment. The second was basically trying to find multiple time frame support resistances and strategies. We've gone for the last couple of years going through a lot of calculations and teaching people how to do that, how to use multiple time frame analysis and so forth. This year, beginning of 2017, we're now going to simplify how to find these multiple time frame strategies and also support resistances in a simple one glance method. Basically, we're going to show you how you could find these key support resistance levels on a visual chart. So no longer do you have to go for the hellacious calculations. No longer do you have to take the time to go through all different time frames or anything like that. You could visually see everything on the chart. In this workshop, we're going to go for a lot, and we're going to show you exactly how to trade the Ichimoku high probability strategy within a couple of seconds. Okay, so let's begin. Normal, we go for our disclaimer. So there's our disclaimer here to state this is for education use only. We're not soliciting you to buy or sell any particular instrument. If you do so, you're doing that at your own risk. All information is owned by EII Capital Group. It cannot be copied or distributed without our written permission. We are broker neutral, so we support any platform out there that supports Ichimoku. So from TradeStation, eSignal, Thinkorswim, from TD Ameritrade, and TradingView, and so forth. Okay? So what are we going to cover in this workshop? In this workshop, we want to show traders visually how to trade. Not going through calculations anymore at all. We want to show you visually how you could trade. So you're going to know exactly where the trade setup's going to be. You're going to know where the trailing stop's going to be and how to use it. You're going to know how to determine targets, something that we have not discussed up to this point. And you're also going to know where to protect your profits when you need to start taking some positions off, or you need to sit there and start basically start tightening up your stop. So in this workshop, we're going to show you exactly how to trade any instrument out there with virtually any time frame at all. So let's begin that process of showing you everything step by step. The very first thing before we go through that step-by-step process is we need to go for a little background, make sure you understand the terminology we're going to use and so forth. The foundation for everything that we trade is basically off this concept called IMTF. It means Ichimoku Multiple Time Frame. The IMTF is basically a foundation for our trading, and it involves analyzing multiple different time frames to find key support resistance values and also to find key strategies in order to have a good reward risk ratio and also to have a good win-loss ratio. Two elements that you need in order to consistently be profitable week by week, month by month, year by year for many years to go. Okay? Under the IMTF umbrella, under the technology, we have two concepts that we've developed. The very first one is the IMTF's institutional support resistances, and the second one is the IMTF strategies, which is also known as email alerts. So we're going to be discussing both of these today. We're going to show you how to incorporate these into a trading plan and how to execute that trading plan for various different instruments for any different time frame. Okay? So first, we want to discuss the foundation for IMTF. Okay, a lot of people talk about this. A lot of people talk about doing multiple time frame analysis, but they don't know how to do it at all. A lot of people get confused on when the lower time frames influence the higher and when the higher are influencing the lower. Okay, also most people, when they find support resistances, they're looking at single time frame. So what we want to do is we want to sit there and show you the foundation for the IMTF technology. Let's assume there's a bucket here of support resistance. Normally, most people sit there and They look at one time frame, they find the support resistance for that particular time frame, and then they basically put a trade off that support resistance off that trading time frame. We're not going to do that at all. What we're going to do is we're going to take a multiple time frame approach to finding support resistances. So what we're going to do is we're going to have three types of traders out there. The very first type of trader you can have is the day traders. So when we're looking for day trading support, what we're going to do is we're going to analyze the lower half of all the day traders, which are 1 minute, 2 minutes, 3 minutes, 4 minutes, 5 minutes. Second is 6 minutes all the way up to 10. And then the third group is basically 12 to 50 minutes. So our algorithms are going to look at all these different time frames, and we're going to find the key support resistances that all the day traders are looking for. If all these time frames don't agree, we're not going to show you a day trading support at all. If they all agree, then we're going to show you the day trading support. Okay? So once our algorithms go for all these time frames and they find the same day trading support, what we're going to do is that's going to go into this bucket here. The second type of traders we're going to analyze are basically the swing traders. Our algorithms are going to go for the 60-minute, 2-hour, and 4-hour, and we're going to find the scenarios when all these three time frames here have the same support resistance. If they have the same support resistance, then that value is going to go into this bucket here. The third type of trader we have are the long-term traders trading daily, weekly, monthly. So we're going to analyze these long-term traders here, and we're going to see when they have the same support resistance. When they do, that value is going to come into this bucket here. So the whole idea is this bucket here, support resistances, represents the support resistance for all the day traders, swing traders, and long-term. Okay? Why does that matter? Well, to find an institutional support resistance, you need to make sure that the support resistance you're looking at is the same for all the day traders, swing traders, and long-term. If everyone is thinking the same value, that's a major support or that's a major resistance. If the day traders and the swing traders are thinking there's a support at one level and the long-term traders are thinking there's a support at another level, then you have two different levels where price could bounce off to or break. That's not good at all. So our ideal scenario is to find with the scenarios when all the day traders, swing traders, and long-term traders are thinking the exact same value for a support or the exact same value for a resistance. Okay? So we're going to look inside this bucket for that type of scenario. Inside this bucket, what we've done with our IMTF technology is grouped everything into two different smaller buckets. The very first one is called a day swing IMTF value, and the second one is called a swing long-term. So we separated out these three different types of traders into two separate buckets. The very first one is where we look to make sure all the day traders and swing traders have the same support resistance value. And the second type of bucket we have is basically where all the swing traders and the long-term traders have the same support resistance value. And we did this approach, reason why is there's different type of traders out there. Some people are day trading, some people are swing trading, some people are long-term trading. And then within each category you have conservative traders and aggressive traders. Okay? The aggressive traders are willing to relax some of the rules where they say, okay, you know what, I'm willing to sit there and take a trade if the swing traders and the long-term traders have the same value, but I really don't care for the day traders. And that's one of the reasons why we create these two different buckets. So now, how do you use this information? Here's how you use it exactly. And remember, our goal is at one glance to simplify the approach. So let's assume you're a day trader. Okay? If you're a day trader, you're basically trading off a 1 minute, 5 minute, 10 minute, 15, 20, 50 minutes, any of these time frames here between 1 to 50 minutes. It doesn't matter what time frame you are as long as you're a day trader. Okay? And now what we're going to do is we're going to visually show you when the support resistances match for the day trading and swing through a graphical representation. So on your chart that we're going to show you in a couple of minutes, if you see a purple dot, that means basically you have all the day traders and swing traders are basically are agreeing on the same support resistance level at that purple dot. Okay, so if you see a purple dot on the screen, that means you got an average probability of winning of that key support resistance level holding. Okay, so that's the purple dot. That's basically where the day traders and swing traders agree on the support resistance. So this has a good probability of holding. Okay? If you have a scenario where you have a cross, okay, that basically means the cross, if you remember, it means that the swing traders and long-term traders have the same support resistance level. If you have that on a day trading time frame, that's a higher probability compared to a dot. And the reason why is this is a higher time frame. You probably heard the scenarios, if you trade with a higher time frames, you have a high probability of success. Same scenario here. So if you're on a 1 minute or anything up to 50 minutes and you have a cross in a setup zone, then basically that is a key support resistance level, and that has a high probability of holding. Okay? There is one scenario that's even higher probability than the cross. That's if you have a dot and a cross. And there's two types of variations you could have that. One is where they're sitting on top of each other. The other one, they could be a little off from each other. When you have this type of scenario, that means all the day traders, all the swing term traders, and all the long-term traders agree on the same support resistance level, and this is the highest probability scenario ever. Okay, so if you're a conservative trader, you're definitely looking for this best probability scenario where you have a dot and cross pretty much at the current bar. If you're an aggressive trader and you're a day trader, then I'll basically be looking for crosses on a day trading time frame. If you're very, very aggressive, then you're going to basically, you're okay in having a dot on a day trading time frame, and you're looking to sit there and trade the pullback trades. Okay, so this is assuming you're a day trader. The next scenario I'm going to go through is if you're a swing trader or a long-term trader. Which one of these are you going to look for? Are you going to look for a dot or a cross or a combination of both? So that's the next scenario we're going to discuss. Okay, so now let's assume that you're a swing trader or a long-term trader. Okay, so in this type of scenario, we're looking at the swing long-term because that's exactly what type of trader you are. And you're trading anywhere from 60 minutes all the way up to weekly time frame and so forth. Okay, in that scenario, what you're looking for are these type of graphical objects. If you're on a swing trading time frame and you see a dot for a pullback, that is a low probability scenario. I would not recommend that at all. Okay, if you're on a swing trading time frame, the minimum that you need in order to take a pullback trade is a cross. Okay, that's the minimum probability that you need, the minimum you need in order to take a pullback trade. The highest probability if you're a swing trader is, of course, if you have a cross or a dot. And as I mentioned a minute ago, there's two variations, so this is the highest probability. So if you're a conservative trader on a swing trading time frame, you're looking for a cross or a dot on the current time frame in order to take a pullback trade. If you're an aggressive trader, you're going to be fine in taking a cross on a swing trading time frame. Okay, so we've gone through both type of scenarios now, and where basically you're looking for a cross or a dot for your particular trading time frame in order to take pullback trades. These are the institutional support resistances that are there. You always want to take pullback trades at these institutional support resistances. Okay. Now that we defined where these institutional support resistances are, we got to start building up our trading plan and move forward from there so we can show you exactly where you're going to enter, where your stops should be, where your targets should be, and so forth. So let's build that up. Now before we do that, here's an example here of IBM. Here's an example of IBM. If you look at this chart here, you could see basically price was consolidating here below these black cross dots here. Remember the black cross dots here, these are swing and long-term resistances where all the swing traders and long-term traders were agreed on the resistance, which was pretty much at this value. You broke out that consolidation pattern and then you pulled back. When you pulled back at the current bar, you had a dot and a cross, which is right there. That means this is basically all three types of traders agree on the same support. This is the highest probability trade there. So in this scenario here, you're going to buy here. You have a buffer as your stop, which we'll go through and show you exactly where that's in a minute. And then what you're going to do is you're going to target this pivot high here for at least a scenario where you could take profits completely there, or you could sit there, take half your positions off or 75% of your positions off here and tighten up your stop. So we'll explain this in great detail on the orders in just a moment, but I just wanted to give you a quick example of IBM on a 30-minute, which is a live trade that we took this week, where it basically pulled back to this level here and then took off. Okay, so let's now build up our trading plan and go from there. So in order to sit there and build a trading plan, we have to come up with a strategy. Okay, so what we did was, in this indicator, we built the Ichimoku cloud strategy. The same cloud strategy myself and my students are trading day in and day out. Okay, and the reason why is this is a tool that we need to use for ourselves to simplify trading. So that's this thing that we've built up. So that's what we're going to show you now, is how can you determine where there's a strategy for a particular instrument and particular time frame. It's very simple. Remember, our goal is to do everything at one glance. Okay, so what you have is a chart here. This is the IBM. What we decided to do is shade the background color now when a strategy occurs, and we keep that shaded area there as long as the strategy is active. Once the strategy is not active, then basically the shaded area goes away. And you could see from this example here, for a bullish scenario, you basically are going to shade this area green. You'll have an option to format the indicator where you could darken this if you want, or you could lighten it up. So you could change the preference that you want here. But you could see that this green shaded area is basically where there was a bullish Ichimoku strategy that's available here. Okay, so anywhere in this green shaded area, you could place a pullback trade or a breakout trade. Once that shaded area is gone, you cannot place a trade at all. Okay, we'll talk about exactly where the entry should be for pullback and breakout in just a moment, but right now I want to show you where the trading zones are. Okay, so this is the bullish trading zone. The bearish trading zone is here, where basically it's in red. When something's in red, then basically means you can now place a breakout or pullback trade in that zone there. Okay, so that's very simple there. So you know that you could only trade bullish in a green zone, or you could trade bearish in a red zone. That's how simple it is. Okay, don't worry about the formulas or anything like that. We already created all those formulas for you, and we already optimized this cloud strategy for you, so that all you have to do is look for those shaded areas and not worry about any formulas or any calculations anymore. Okay, now let's start talking about the orders. So once you have the shaded area, you have the ability to place a pullback or breakout order. Let's discuss both of those in detail. So here's a zoomed in of that IBM area of the green shaded area. Okay, now let's break this down bit by bit. Okay, so in this green area is where you could place the pullback or breakout orders. So if you look here, in a bullish scenario, you're going to see blue dots above price in the green shaded area. If it was bearish, you're going to see the blue dots below the price in the green shaded area. The reason why is these blue dots are your breakout entries. So this is where you'll put your buy stop here for a bullish breakout. If it was a bearish example, you'll put your sell stop at the blue dots below price. So this is your breakout entry there. Okay. Your conditional stop, whether it be a pullback trade or a breakout trade, will be these green dots. These green dots, once price starts to move, will start to move. So these green dots will act as a trailing stop for your trade. Okay, so whenever these green dots move, that's where you're going to move with this. Before, we gave you the formula for the buffer, and you have to calculate everything out here. You don't have to do that at all anymore. Now, if you're going to do a pullback trade, you need to make sure that you have the IMTE support resistances based on the criteria we gave earlier. Okay, this is a 30-minute trade, so basically if you have a dot in the zone here, that basically means it's an average probability. If you have a cross in the zone here, that basically means it's a higher probability and it's a good trade. If you have a dot and a cross, that's the highest probability out there, and that's one of the perfect trades out there. So in this scenario here, you have an option here to place a pullback or a breakout. Okay, so the pullback would be at the green Ichimoku line here, where basically the cross and dots were at. Okay, or you could place a breakout trade at basically the blue dot there. You could do both if you like, but this is very simple, so that's it. So if you notice, we've dumbed this down now. All you have to do is go to that particular instrument you're looking at, the time frame, see if it has a shaded area. If it has a shaded area, you could place a breakout at the blue dots, okay? Or if you're trying to do a pullback, if you have the IMTF dot or circle that you need, all you do is put a pullback order there and you're ready to go. That's it. Once you're in the trade, you use these green dots as your trailing stop, so you don't have to sit there and think about where your stop needs to be at all. Those are the dots there. Okay? Now, we covered everything for entry. The only other thing that we haven't covered are overextensions. A lot of people sit there and use a lot of momentum indicators to find divergence and so forth for overextension. Okay? We're not going to do that. We don't believe in adding other indicators at all. We have everything that we need in the Ichimoku tool to do that. And so what we've done is we have a proprietary formula to determine overextension. And that's what I'm going to go through now. Okay? So when you have overextension, you're going to have dots that appear. So if you're in a bullish scenario, the dots are going to appear above price. If in a bearish scenario, the dots are going to appear below price. Okay? And these dots will appear whenever overextension occurs. Now, if this dot right here, we program this to be red, but sometimes it looks orange. So if you get that red/orange dot above price, that means basically it's a short-term extension. When you have a short-term extension, what that means is that if you're in this trade, you should go down to a lower time frame to manage the trade. If your trading time frame was a 30-minute, you should go down to a 10-minute. If you're on a 60-minute, you should go down to a 30-minute and use the green dots. If you're on a 4-hour, was your trading time frame, then you should go down to either a 2-hour or a 60-minute and use the green dots on that time frame. Okay? The second type of dots we have, and these are supposed to be yellow, but they look green, so these yellow/green dots here above price are called medium. When you have those, that basically means you should probably take off 50 to 75% of your positions at that point and take some profits and run with it. And the rest of the positions, what you should do is go into what we call preserve mode, where you tighten up your stop. No longer use the green line as your the green dots as your trailing stop. What you should do is take this red line minus the buffer below there and use the red line minus the buffer in this example here as your trailing stop. So basically, when you get a yellow dot, that basically means you go to preserve mode. Okay? And the last one is the extreme overextension, and that's basically when you get this black dot. Okay, when you get that black dot, that means get out of the trade right away. Don't think about it, but just exit the trade there completely. Okay, so to summarize, if you think about this, visually, we've given you everything now where we've dumbed trading down. All you have to do is go to a particular instrument or time frame, sit there and look for a shaded area. Once you get that shaded area, you have the ability to place pullback or breakouts. Breakouts will be at blue dots. Pullbacks will basically be at MTF circles and crosses. Okay? Once you're in a trade, you're going to basically trail with the green dots. If you get to overextension, we talked about exactly what you're supposed to do. Okay? So here's a summary of all the rules, just in case if you didn't get it. Let's go for it one more time because I want to make sure it's simple. 1, go to your trading time frame. 2, wait for a green shaded area or red shaded area for a bearish. Once you do that, what you could do now, and I'll talk about this, you could confirm that setup with another technical system. If you're not using Ichimoku, that's no problem at all. You could confirm the green shaded area, the red shaded area with any other technical system out there, such as moving averages, RSIs, pivots, person's pivots, regular pivots, Bollinger Bands, Elliott Wave, Fibonacci. It doesn't matter at all. So you could confirm it with any other system if you like when you get that shaded area. Some people want that double verification with 2 technical systems or 3. We're perfectly fine with that, so you could have that there. If you're an Ichimoku trader, you really don't need to confirm it at all at that point. Then you place a breakout order. You place a breakout order at the blue dots. You place a conditional stop order at the green dots, which is basically tied to the entry order. And then what you could do is you could apply your optimization rules based on Fibonacci, Ichimoku, or so forth to determine is that a good breakout trade or not. So you could apply optimization rules with Ichimoku concepts, such as looking at momentum and other things, or you could even use other technical systems out there such as Fibonacci, Elliott Wave, and so forth. I will show you some live examples of Fibonacci and Elliott Wave with this IMTF indicator in just a moment. Okay? Once you do that and your optimization rules say this is still a green light to place the trade, you go ahead and move forward. You place a cancel alert at the conditional stop just in case it doesn't get to the entry and decides to reverse. You have that cancel alert here to tell you to cancel the trade setup. Once you have all that set up, you evaluate the reward risk to make sure you have a potential to get to 3-to-1 reward risk ratio. If everything still looks good, then you verify your entry and your conditional stops are not on existing support resistances. If so, you move them off, and then you're ready to sit there and wait for the markets to meet your conditions. If they do, you enter the trade. The pullback trades are very similar, but a little different in that first you're going to go to your trading time frame, same as breakout. You wait for the shaded area. You confirm the setup with your other technical system if you have another system. Then you place a pullback order. Pullback orders are basically at the MTF's dots or crosses, and we've already gone through which combination you're looking for. Okay, so we don't need to go through that again. Your conditional stop will be at the green dots. You apply any optimization rule based on Ichimoku or any other technical system out there. You evaluate the reward risk, and then make sure that your entry and conditional stops are not sitting on existing support resistances and so forth. Okay, so this is your trading plan for basically for pullbacks and breakouts. We've repeated this over and over, so you guys should be good with that. Okay, now the only other component we're missing are targets. Okay, and also preserve mode. Where do you sit there and tighten up your stop? Where can you take some positions off and so forth? That should be 75% of your positions, not 875. Okay. So what we're going to do is we're going to look at support resistances in the past to determine exactly where our target should be and preserve mode should be. And what I'm going to do is I'm going to illustrate this concept with a couple of different charts. Okay. So let me go to the charts to show you that. So here's my first example here. This is a US yen on a monthly time frame basis here. Okay. And what you're looking for are trends. So you guys could see that there's a trend from here to here. Okay. There's also a trend from here to here. There's also a trend from here to here. So what you're looking for is you're trying to find dots or crosses that started trends. Okay. Now, you can't see it here, but there's a dot right here. You can see a cluster of crosses here. And if you sit there and you draw it here, you could see that these cluster of the crosses here, basically it started a trend. In order to start this bearish trend here, you had to break that support of these crosses here to start the trend here. Okay, so those crosses are relevant there. There's a support here. To start this bullish trend here, this support of this cross right here held. So I'm going to sit there and mark off these levels here right there. Okay. Later on, you could see that basically right here, there's a cross right here, right there, and you could see that was basically resistance that basically sat there and held in order to start a downward trend here. Now, we're going to look at current price. If you look at current price, look at what's happening. You could see that those past IMTF values that started trend are haunting us today. Look what just happened this month. We came straight to that resistance level here that we've been holding for the last 2 months, which was created, if you look back here and you scroll all the way back here, but this level right here was created back in 2003, and basically that's what's haunting the long-term picture for the US yen. And that's basically stopping its dead in its track right there. Okay, and you could see the other two supports. So if it breaks this green line here, you could see that it's got a high probability of getting to this support, and notice one thing, the past support in the past matches up to the red line here. So there's a high probability right now with the US yen, if it sits there and breaks this green line support right there, it's going to sit there and come all the way back to 109.03. Okay, in order for this to sit there and go long-term bullish, it's got to break this resistance at 118.65. So you could see how past support resistances are affecting you drastically here. Let me show you another example here which will blow your minds when you see this. Okay, so here is another example here. This is Euro USD and the monthly time frame. And you can see we're going back to 2003, 2004, okay? And we're looking for dots and crosses that started trends. You could see here that this bullish trend here started off with this little dot right there. So let's go ahead and mark that guy off. Then you could see here that this pulled back here. In order to start this next leg of trend here, it basically held that cross right there. So I'm going to mark that guy off right here, okay? And you could see various things here. You came down, there's a little cross, the little dot right there too, so I marked that guy off, okay? Now, what I'm going to do is I'm going to forward this off to the current time. Look what's going on here. You could see the Euro USD, I'm not sure if you noticed this, for the last 2 years, we've been holding this resistance that was established back in 2003 right here. And you could see we've been holding that resistance very, very much right here. And you could see we're holding that level here. That means long term, the Euro USD will not go bullish until we break that resistance there. And it's got a high probability to get to the next major support, which a lot of people are saying is 1.00. But if you look, our value is actually 97.88. There's a lot of things that have to happen to get there, of course, a lot of things in the technical charts. Also, you don't know when that's going to happen, but the long-term overview of the picture is that as long as this resistance here gets maintained, there's still a high probability of getting to this support, which is basically at 97.88, okay? But the key thing is you could see how these past support resistance levels are basically establishing targets and levels where price is definitely holding. And I'll show you a couple of more examples before we move on and start looking at some live examples and live trades. Here's another example here. This is WDC, Western Digital on the monthly time frame. You could see that basically there's a big long consolidation pattern, then it broke out, and then it started free falling going down. Notice when it started going free falling going down, it came and held at this support level here. And if you look, that support level was basically an IMTF square cross right here that basically influenced here. We entered this in our long-term value account right here to basically go long here, and you could see how well this thing's been doing in the last year, year plus right now. Remember, this is a long-term trade. This is one thing that's why you take them off the monthly account. These are basically value account positions and so forth. Okay? So let me move on to the next example. Here's another example here. This is the CAD yen. You can see it started a bullish trend here. Then eventually it basically got stopped for profits and then started going down with these big red bars. Notice this thing free falled. Whoops. So you could see that basically CAD yen, when it started free falling, got to the top of the cloud. But if you look backwards in time, you'll see that these IMTF dots right there in the past, right there, had stopped it dead in its track when it's free falling. So you could see that basically when this was going down, where the bounce level was based on these support resistances in the past. Okay? Now, let's start looking at some live trades because we put everything together. We showed you exactly when you start looking for a trade setup is basically looking for a green shaded area or a red shaded area. Once you have that, then you basically could sit there and put a breakout or pullback trade depending on what you see. Okay. After that, basically you're going to sit there. If you enter the trade, you have your trailing stops, you have your overbought, oversold extensions, and then you also know exactly where your preserve mode, where you're going to tighten up your stops and your target's going to be. So let's put everything together and start looking at some trades. These are trades that we've taken that I'm going to show you. A lot of these trades, believe it or not, are the ones that we've been blogging on social media before they occurred, and we've been stepping you through them too. Okay? So the very first thing I want to do is I want to remove Ichimoku and show you how you could use the IMTF indicator to optimize any technical system out there. That means it could be Fibonacci, it could be Elliott Wave, it could be Bollinger Bands, it could be moving average systems. It doesn't matter at all. In fact, we're going to put a series of videos out in the next couple of months where we're going to show the IMTF indicator with any technical system out there, and we're going to show you how you could optimize those technical systems with the concept that we just created, irrelevant of Ichimoku clouds and all that stuff. Okay, so if you look in here, this is an example here of a Fibonacci trade. And if you look here, you basically started here. You had a trend all the way down to here. So this was a bearish trend here. You could see in a red zone here, you're looking for a bearish opportunity. Okay. If you're a Fibonacci trader, you're drawing your Fibonacci lines. The green one here is a 50% and a 61.8. The very first thing Fibonacci traders are, where is it going to bounce? Is it going to hold the 50% or the 61.8? You really don't know that at all. You could do Fibonacci clustering, you could do different time frame stuff and all that, but you're still at that point, it's still random in nature, believe it or not. So one thing you could do is, now what you could do is you look for MTF dots or crosses at these Fibonacci levels. And if you get them, now you could take that Fibonacci trade. So you could see when we got to this green line here, was there a dot or cross? No. When you got to the blue line right there, there's a dot right there. You could barely see it, but there is a dot right there. So at that point, you could sit there and enter the trade pretty much at the 61.8% retracement, and you could see you had very little drawdown here, and you could see it made a move, retraced 100%, then it went down to 127%, 161.8, and so forth, and kept on going down. If you did not see a dot or cross at the 50% of 61.8, that's a Fibonacci trade that you'll walk away from. I challenge everyone that's a Fibonacci trader to use this, and you could see how very effective a trader you're going to be in applying the IMTF indicator with the Fibonacci levels, and you're going to see that your win-loss ratio is drastically going to go up. You're also going to see your reward risk is going to drastically go up, because you're going to get very little drawdown, believe it or not, when you enter these trades, when you get the IMTF multiple time frame support resistance levels matching up to your Fibonacci levels. Here's another example here. In this example here, you're basically going to have a bullish trend here, right here, all the way up to there. Then it's going to pull back. The 50% is here, 61.8 is here. When you drew back, came to the 50%, there was no dots or crosses at all. In fact, you had dots or crosses as resistances, but not sitting there acting as support. Then you got the 61.8. There's no dot across here at all. So this is a trade, a Fibonacci trade, that you would not take at all. And look what happened if you took this trade. You go back and forth, believe it or not, you probably would have been stopped out here, then you would have seen it go up, then you pull back, and so forth, and all that stuff happened. Okay, that is not good at all. And this is these types of trades you want to avoid. So you could see that basically with the IMTF indicator, it stopped you from entering this trade and basically stopped you from losing, so it improved your win-loss ratio in all your trades and so forth. Okay, next let's go look at it. If you're an Elliott wave trader, here's an Elliott wave trade pattern here. Okay, and I know that Elliott wave is subjective and you could have different patterns and so forth. So this is an Elliott wave pattern here where you had a 1, 2, 3, 4. Okay, now this is the Elliott wave pattern that can redraw at any point, especially if based on different time frames and stuff like that. What you're looking for is at the Elliott wave 4, which is basically where the Elliott wave traders are telling you to buy and trade the retail leg here. You're trying to buy there. So again, what you're doing is you're trying to find at the Elliott wave 4 a dot or a cross. If you have a dot or cross at the Elliott wave 4, then you could buy it. You don't have a dot or cross in here, and if you notice, this is not an opportunity you would buy here. And you could see that most Elliott wave traders are trying to buy it and get it to come here. You could see it fell short here and it started to go down. And in fact, if you look back here, there's a dot right there or a cross right there that started this whole downward trend, and you could see that this came here, stopped at this level right there, and now starting to make a move to go down. And if you actually look at this level here in the Fibonacci world, that's probably about 78.6, around 88.6 where it fell short. So this trade's going to sit there and now start to pull back or consolidate at this level. These are not type of Elliott wave trades you want. you want to sit there and take the ones that basically are going to sit there, get to the retest the pivot high right there to 100%, break it, go to the 127 or the 161.8 and start giving you good reward risk ratios and stuff like that. That's why if you're going to apply use Elliott Wave, use the IMTFs to make sure there's a dot across at the Elliott Wave 4 pattern in order for you to sit there and trade that. Okay? Let's now go on and let's bring in one other technical system and then we'll move back to Ichimoku. A lot of you guys know that basically we started talking about Hakinashi. Hakinashi is another form of Japanese candlesticks. In fact, it was invented before Japanese candlesticks. A lot of people don't realize it. The purpose of Hakinashi is to take volatility and make money off volatility. That means you have to have volatility in the trade in order to make it. So if you look here with how do you apply the IMTF in Hakinashi, you wait for a shaded area, you got that. Now this is a 30-minute, so you're looking for a dot. You have a dot right there, you have a purple dot right there, and you have a Hakinashi candle with no wick in the bottom. That's a perfect scenario here. Based on the Hakinashi rules to trade, you take the high of the bar and you place a breakout entry, which would be right there. So you enter here and you take the previous bar low, that would be your stop. So your risk is there. Then what happens is every time these bars move up, you use the previous bar low as your trailing stop. And you could see in this trade here, you're still in this trade, price is right there, and your stop is right there. So you could see from the initial entry right there, you're right up here to there and you're already profitable, and even if this thing decides to reverse, you're still locking in profitable trades. So this is Hakinashi system with the IMTF that are basically used in the Hakinashi world in order to optimize everything there. Okay, so that's another way you could make sure you could use the IMTF indicator in order to optimize any other technical system out there. So I've given you 3 glances of how to use the IMTF in order to optimize any technical systems out there. Now let me go back to Ichimoku, which is our specialty and so forth, and show you how to use this within the Ichimoku world and show you some real live trades that we've taken. This is the first one, CRM, Salesforce. If you look at this trade here, this is a 30-minute. So we looked at this on a 30-minute. We're looking, sorry, 60-minute here. So this is a swing trading time frame right there and there. So if you look, we looked at the green shaded area in here. We looked for a pullback to the crosses that never occurred. Instead, it broke out. When it broke out this point right there, we basically looked at options for this trade. Okay. Now, since we had a swing and long-term support here, we know that this is bullish all the way up to the daily time frame. If it wasn't, you would not have a support here at all. So even though we're taking this trade off a 60-minute, we're looking at this trade to go a little more long-term, which could go into the daily time frame. Okay, so what we did, and I'm going to show you the trade right now, is when this broke out, we basically put an option trade on. We analyzed the option Greeks. If you don't know options, don't worry. You could buy the shares and you could do the same things, but we did options to reduce the risk. So what we did here was we basically bought the January 17 calls for 77.50 calls for this for basically about, and if you look at it, it was about 60 cents to 65 cents here, and we basically bought those calls. When I took a snapshot of this, you could see that basically we were at 200% gain already, and we still have the entire month, almost the entire month of February to pretty much go in order for this to keep on going. If I wanted to walk away, I could walk away with 200% today. But what I did was we got to a point we got overextended on the CRM, and this was yesterday. So what I did was instead of taking the position and running, because it still has some long-term gains, it could still go, what I did was I turned this into a spread. So I sold a 79.50 call against this. I collected $1.13, and this is what the trade looks like now. That means now, if you look at this, if this thing goes to zero, I'm still guaranteed to make $48 a contract right now. The maximum profit I could make on this is about $250, $40 a contract. So this is a low, no risk trade now for me. All I have to do is just sit back, relax, and let this thing keep on going, and I'm guaranteed to make money in this trade. This is a free trade. You have to sit there and get your accounts with a lot of free trades, because that's how you're going to make a residual income no matter what's going on in the market. Okay? Let's look at some more trades. This is Rockwell Automation. This is a 60-minute here. Notice on a 60-minute in the green shaded area, I had a dot and a cross on the same time frame. So I put a pullback trade here. On the pullback trade, this is our risk to reward. If you look at it, my entry was here. My dots, the green dots are here. So my initial risk was right there. And my preserve mode was right here. So this is a 300% gain when I retest that high right here. Instead of retesting that high, that thing gapped up on the next day of market open, and look what happened. This is more than a 300% gain. So this is a welcome gap for me, definitely. So we enjoyed that little gap right there. Okay, so let's move on to some more of the trades. We're going to quickly, here's Australia, New Zealand on the 60-minute. You could see in a red shaded area we basically had crosses. This is a pullback trade right there, retested the pivot low and kept on going. And you could see from the reward risk, this was a 3.66 reward risk to retest the pivot low. And you could see we're already past that and we're getting close to a 4-to-1 reward risk ratio. And if you actually look at the Australia and New Zealand, it went all the way down here below around 430. So it's way down here now, right around these announcements. Okay, this is QCOM. So this is a weekly time frame for QCOM. In our Options University, we teach a scenario called pre-earnings trades, where you basically take all your rules and everything, you look at a chart, you can look at a chart anywhere from the day before earnings to 3 weeks before earnings, and you look at a weekly chart, and based on your rules, you determine what's going to happen before earnings and after earnings with a particular instrument. So this is QCOM here, and you could see here we had some crosses here on QCOM before earnings. This is 2 weeks before we had a cross, and notice the crosses were going down. That's showing you resistances which were swinging long term were going down. So what we ended up doing was basically buying puts before IV went high, and we basically were going to carry them all the way into February. And you could see that those puts really did well, because before February even started, before time decay came in, the stock tanked here drastically to the point those options are drastically in the money now, and we're already taking profits on majority of them there. Okay, on some of them we left running, and the reason why is our goal now is to target this 52.61 long term, because if you look back, there's a dot right there, and this is basically the resistance, the support and resistance it used to start this bullish trend there. So we're looking for this to get to that 52.61 long term for this particular instrument. This is PTC. This is a stock trade. This gapped up, and we basically bought here. We got out at 300%. Then we got back in, and we basically went all the way. It retested this pivot high and so forth. This is one you could go on social media. You could look at Facebook, Instagram, Twitter, Spotify, any of them, where we stepped everyone through this trade from entry to the first trade where we took profits at preserve mode, to where we got out of the trade, to when we went back in, and then we basically took profits yesterday where it basically broke the pivot high and kept on going. And you could see that basically we had a 10-to-1 plus reward risk ratio on this trade, and we stepped everyone through it step by step on social media. This is another one, LRCX. This is no strategy here, but you could see in the consolidation pattern, you broke out that consolidation pattern, you pulled back to these crosses there, and then basically it took off here. This is E-mini. E-mini here, trade here. Unfortunately, I didn't put the red shaded area in here, but there was a strategy in here, and you could see here it had a wall of dots here, resistances. So basically we shorted it there. Our stop was the green dots there, and you could look at it. It was about, I would say, about 4 ticks to about 5 ticks of a stop, and you could see here basically broke the pivot low, kept on going down here, and basically at this point we basically took profits. This is pound New Zealand on a 30-minute. You could see the red shaded area right there, and you could see the trend that started after the red shaded area. Okay, now I want to quickly talk about some things in here. Notice you have a green shaded area here. So in this green shaded area, the breakout trade never occurred. In the pullback trade, you had some dots here where basically you enter those dots there, you got to the pivot high. So this may not look like a successful trade, but in a pullback trade, you did get to the pivot high, which is exactly what you're looking at. Didn't break it to keep on going, but you still made a little money if you did a pullback trade in this green zone there. Okay. And if you look at this red zone here, notice in this red zone here, when it came to the pullback level of green line, there were no dots at all. And then you notice on this, these dots right here were the red line. If you know Ichimoku rules, you cannot take pullbacks on red lines at all, which is the Tenkan-sen. You can only take pullbacks on basically the Kijun-sen or the SKB. So there's no pullback trade in here that you took at all. Based on the Ichimoku rules, and there was no breakout at all, so there was no loss at all. So if you're looking at these charts thinking that you lost in these scenarios, you didn't at all. In this red zone, there was no trade. In the green zone, there was a pullback trade that did get to the pivot high, so you did make some money there. And then this red one here is where the big trend started to occur. Okay, this is pound New Zealand on a bullish trade going up. This is US yen on the 30-minute going down on the red zone here, and so forth. Okay, now we showed you simple charts where you could go to this particular instrument in any time frame and you could start looking for trades. Okay, and those are the ones that give you a potential of 3-to-1 and reward risk and higher. Now what I want to do is I want to show you how you could break that reward risk barrier. Okay, and the reason why is up to now with the IMTF indicator in one time frame, we basically showed you how you could get to a 3-to-1 reward risk ratio consistently with the methods of the trading plan and so forth and so forth. Now what I want to do is I want to break that 3-to-1 reward risk ratio barrier and find opportunities that could give you 6-to-1, 10-to-1, and so forth. So what we're going to do is we're going to combine our IMTF technology and use both concepts. We have the IMTF strategy, and then we have the IMTF indicator, which finds the support resistances. And we're going to combine those two now where we could get a potential of higher than 5-to-1, 6-to-1 reward risk ratio and so forth. And let me show you how. Off our website, we give you these what we call email alerts. And what these are is it looks for multiple time frame strategies on 10, 30, 60, 120, 240 daily. So we look at 7 time frames and look to make sure every one of those time frames have a strategy on. Okay, so what we're looking for are 6 time frame buys or sell email alerts. That means 6 of the 7 time frames there's a buy strategy set up ready to go. Okay, it's kind of like dominoes lined up on a table. All they need is one domino to fall, which is a breakout on one time frame, and it'll cause all the other time frames to fall, which basically means you could access the rewards from those time frames. So here's an example here of January 23rd, 2017 for a 6 time frame email alert here. Okay, we're going to look at MOS, M-O-S, on a 60-minute. You can look at any time frame that the MOS is on. The number 4 basically means it's a cloud strategy. So you could look at this on a 120-minute for a trade. You could look at this on a 30-minute for a trade. And those are the 2 time frames you could look at this on a trade. We're going to choose 60 minutes for right now. If you look on a 60-minute, you take that email alert. Now you basically look at the chart visually through the IMTF indicator on the chart. Over here, you have the green shaded area, which is exactly what you're looking for. You have the dots, you have the crosses here for the 60-minute, which is exactly what you're looking for pullback, and then you have a breakout. You could see in here, never pull back to your crosses, so there's no breakout pullback entry at all. It broke out here, so basically when this broke out, you're looking at this trade here to enter, and you could see it's doing well. Another opportunity here is January 24th. This is around 12 p.m. Eastern Standard Time. This was NEC, Norfolk Southern. A 60-minute again. You look here, there was a crosses here. It didn't pull back to the crosses at all. So the only thing it has was breakout level here. It broke out right there, and you could see it kept on going here. Next is basically UNC. Now, some people ask, well, wait a minute. The breakout occurred at this point right here. Yes, it did occur at the bar that's not shaded. The reason why it's not shaded is because it broke out. That's one of the reasons why it's not shaded there. So it's assuming that you enter the trade there and the setup's no longer valid. That's why your entry is in the non-shaded area in here, because when you entered, that shaded area went away. Okay, another example here is basically January 24th at 3 p.m. and you could see UNM. This is UNM here. You could see that it had crosses here at SKB. So we entered this trade here at this cross right there. You could see it got to the pivot high and kept on going here. So this definitely got to a 3-to-1 reward risk ratio and got a lot higher to there. If you did a breakout, you're waiting for it to basically break out, which is the red bar right there is where it broke out, and you could see that's broken out and gone up a couple of points already on there, a couple of cents above there. Okay, last one we're going to go for on the email alerts, which is the multiple time frame strategies, the win resorts. And you can see win resorts here. It pulled back to a cross right there. And so we entered a pullback trade here, and you could see it did well, more than 3 to 1 reward risk ratio. If you did a breakout trade, you entered on this bar where it went non-shaded, and at that point you're doing well too on a breakout trade. So you could see that the email alerts basically does a lot of optimization for you, and it also opens up the reward risk to a potential you have a more than a 3 to 1 reward risk ratio on these trades. That's exactly what you're looking for, things to be easy. Okay, so now let's start wrapping up and start putting everything together. Here's a high-level trading plan. Okay, when to use what tools that we have. If you're looking to analyze a couple of instruments here and there, then what you need to do is you could look at the those particular instruments on with the IMTF indicator on charting. Okay, you're not looking to scan for a whole list of instruments at all. You're looking at a couple of things and so forth. That's where basically the IMTF indicator for the charting basically comes into play. If you're looking to scan for opportunities out there, then you go to our website and start using the tools we have available. Okay, the tools we have available in the website will allow you to filter. The tools that are available there are scanners and also the IMTF strategy finder, where it finds 6 time frame email alerts, 7 time frame email alerts, and those things. So what you're looking to do is taking maybe the whole S&P 500, taking all the currencies and so forth, apply some filtering mechanisms and so forth, and then you're going to get a list of opportunities. When you get those list of opportunities, you're then going to go to the IMTF indicator in the charting package, and you're going to start looking for the setups and everything based on what we gave you. Okay, so you could fit any one of these categories here depending on if you're looking at doing filtering for a huge list, or if you're looking to sit there and just look at a couple of instruments and so forth. So this is basically how everything works. But you could see that the IMTF Now indicator for the charting package is the visual way of basically finding everything, putting on the trades. It's going to tell you exactly where the trade should be, where your stop should be, where your trailing stop should go, your preserve mode, and everything. So everything's visually represented at a one glance. So you could easily trade now within a matter of seconds compared to hours and so forth, or even minutes that a lot of people are doing to perform these calculations. Okay? Now, we're going to open up the Q&A. So a lot of people have been asking us in beta trial and so forth and everything that we've been going, a lot of questions. So what I'm going to do is I'm going to kind of go for a Q&A and answer some of the questions that are available and so forth. Okay? The very first question is, where is this IMTF indicator available? Right now it's available on this charting platform called TradingView, and I'll talk more about that in a minute. Okay, we basically developed this on the TradingView application. First, the reason why is TradingView is one of the best online charting platforms out there. It supports a lot of different exchanges around the world, not just U.S. currency, stocks, and futures, but also goes across to UK, goes to Asia, and so forth. So they support Indian stocks, Australia, Japanese, and UK, and so forth. Okay, so we always want to make sure that we're developing to a platform that supports various different exchanges. Second, they have an engine where we could sit there and program, and we could sit there and do our multiple time frame analysis with all the algorithms. So TradingView allowed us to do that, and that's one of the reasons why we have the very first support for the IMTF indicator for TradingView. And the good thing is it works on your mobile phone, it works on the browser, and so forth. It does not take up much of your CPU access or your memory access at all, and we'll talk more about that platform in just a moment. Second question is, are we developing this for any other platforms? A lot of people are asking, can you develop it for Thinkorswim? The answer is no, and the reason why is Thinkorswim does not have a development environment in the back end that's powerful. I understand that ThinkScripts, but that really is not powerful in order for us to analyze multiple time frame analysis. To do our IMTF indicator for a particular platform, we have to have a development environment in the back end, and it has to be really, really good. Okay. In the future, we will be looking at TradeStation, eSignal, but right now there's no plans for it. TradeStation, we may, I'm not sure. We have a presentation at the end of February. If we are, we will release it at that point, but right now we're not thinking about that at all. Our plans and goals are pretty much for TradingView, and the reason why is TradingView is very, very cheap to sit there and chart. There's a free version, and then there's a subscription version where you could get real-time data, which is pretty much cheap, so I'll show you that in just a moment. Okay. Other questions is, do you still need the website for scanning, or do you just use this, or how does it work? Well, if you're, as I mentioned before, if you're only looking at a couple of indicators, then a couple of instruments, then all you need is the IMTF indicator, and you could sit there and visually see everything. If you want to scan the whole market for opportunities, then what you'll do is you'll use the website tools from the email alerts and the scanners and so forth out there. Okay. So I think I've got majority of the questions. Let me open up the floor to find out if there's any more there. Now, if you do have any other questions, you could email us at info@eiicapital.com. Believe it or not, we do have various videos out there now. So when you get the IMTF indicator, there's a video that explains the IMTF technology through wave patterns and stuff like that. They're short 5-10 minute videos. We also have videos on TradingView and how to set it up and all kinds of other things. The other things you should be doing is watching us on social media, where you can see our live trades with these IMTF indicators there across the board, from trading stocks, currencies, futures, and various instruments around the world. Okay? Now, the big question comes, how much is this? This is a magical question everyone asks. Okay? Believe it or not, this has been years and years of development there. A lot of people, for what we're doing now, are charging thousands of dollars for this. We don't want to do that at all. We want to sit there and help retail traders become institutional traders. So what we did was we gutted the price for this particular indicator. It's only going to cost you 41 cents a day, or if you look at it, it's basically $99 a year. This is a subscription, a yearly subscription-based model. It's $99 a year. This is a discounted price right now that we're giving everyone. It is for a limited time. Please don't ask us when it's going to expire. What it is once we get to a certain quantity, at that point we're basically going to sit there and increase the price drastically. So this is a grandfather way for you guys to get in at the cheap price of $99 a year, and trust me, you'll make that up in just one little trade. And you got a whole year to find that trade too. This is a low-cost offer. People are shocked we're doing this, but my goal is that we want to sit there and make sure that everyone starts using this to basically optimize their existing way of trading. Whether you're trading with Ichimoku or not, it does not matter to us. But basically, for the IMTF indicator, it'll help you basically optimize your existing way of trading. If you don't have a successful way, then it's a great way for you to start and become successful straight out of the gate. Okay. If anything, you could use this indicator for your long-term retirement accounts, where you could find long-term opportunities to just use this basically on the daily or weekly for your retirement accounts, or you could even check anyone that's your financial advisor, any trades they're putting on and so forth in there. Okay, so this is a special promotional offer here. Now, let's talk about how you could purchase this and how you could find out more information about TradingView. So in order to sit there, as I mentioned, this is initially available for TradingView. That means you have to go in and sign up for TradingView, and I'm going to show you how to do that in just a moment. Okay, here's the link here. So if you go to www.ichimokutrade.com/TradingView, I'm going to do that in a minute, and you're going to go to TradingView. They have a 30-day free trial that you could sign up for, and I encourage everyone to do that. When you sign up for that trial, you're going to basically get a user ID. If you're looking to purchase our indicator, we need your user ID. Okay, so I'm going to show you exactly how to do that. Don't go and do it yet. Please follow our instructions, because I do not want to create a support nightmare at all. So give me 1 second. I'm going to switch over to my browser. I'm going to show you how to do everything here. So what you're going to do is you're going to go to a browser. It could be a Google Chrome, Internet Explorer. It doesn't matter at all. Remember, you could use TradingView on your mobile phone too. So I'm going to use the Google Chrome because we like that a lot. I'm going to go to ichimokutrade.com, which is our website, /TradingView. Okay. When I do that, it's automatically going to take you to the TradingView website. Okay. Now I've already logged in and registered and so forth. If you didn't do that, then what will happen is you come home, it'll ask you to register and so forth. Okay. If you're already registered, all you do is click on home, and on the top right hand corner you'll see what your ID is. My TradingView ID is called Ichimoku Trade, but you need to sit there and register for free and get your ID. Okay. Now, how much does TradingView cost? If you scroll down to the bottom, I'm going to come down here to the Grow Pro here. Here's all your options here. So they have a subscription plan here. Now, don't get freaked out with these prices right now, and let me explain these here. So there's a Pro version here, $9.95, Pro Plus $20 a month, Premium $40 a month. Okay. Now, one thing is that we noticed that if you enter trial, once you are close to end of your trial, TradingView right now are giving 50% off at the end of that trial. So if you look at it, if they give you 50% off, the Pro Plus is going to come down to $10 a month. This is going to come down to $5 a month. If you're okay with delayed data, then basically it's going to be free. So there will be no cost for delayed data if you use TradingView, but any other options in here, you could get 50% off these values here at the end of your 30-day free trial. If you scroll down here, you could see exactly what's offered in each of these different versions. It is up to you to go for your due diligence to see which one you like in any of these here. If anything, you could go with a delayed data, 10 to 15 minute delayed data, and everything will be free. But you could see in here that has server-based alerts in here, where you have all these alerts and all so forth in here. They have limited amount in here, active charts here. You could use this on 2 devices at one time and so forth. Number of indicators, you don't have to worry about that at all. Save layouts, templates, and stuff like that. Okay. If you keep on scrolling down, you'll see all the information in here. You also come down in here and see extra data. So if you're looking at different exchanges and all that, if you're looking at real US data, here's the real-time data in here for futures and stuff like that. Now, if you sign up with they do have the ability to trade through CQG or FXCM and stuff like that. Some of these fees can be waived, but it's up to you to go through and look for all that stuff. Okay. It supports Russian market, UK, India. Here's the monthly fees and so forth there. As I mentioned, you don't have to go through and pay for all this stuff. Everything can be free, but you got to be willing to live with 10 to 15 minutes of delayed data. For a lot of people, that's no problem at all. Some people, it is, and go from there. Okay, but this is basically what we have available right now for TradingView. Okay, once you go through and you sign up for TradingView and you have your TradingView ID, then what you could do is you could purchase this indicator by going to ichimokutrade.com/indicator, and it'll take you to our order form here. Okay, in here, if you look at this field here, you have to put in your user ID here. Okay, if you don't put in your user ID there, then it's going to take us a while to activate you. So you need to make sure you do that there. Okay. Once you fill out this information here, remember all this information is proprietary and is encrypted. So even if someone hacks into our website, don't worry, they're not going to get your credit card information at all. We are PCI compliant and everything out there, and we do use the best credit card companies out there, not PayPal or anything like that. So we are compliant with all the credit card companies and fraudulent things out there. But the key thing is putting your username in here. Once you purchase this indicator, we'll send you a link for the for some videos on TradingView, how to set up TradingView. We'll also send you some videos on how to set up the indicator and talk about the indicator some more. Okay, please allow us anywhere from 1 to 3 days to activate you, and the reason why is due to this low price here. A lot of people are coming in and purchasing this indicator. So remember, we are traders first before we do anything else. Okay, so during the morning and afternoon we're trading. in the evenings is when we're doing this stuff. Okay, so we're getting around to doing everything there. So please allow 1 to 3 days for us to activate everyone, and I promise you we'll get that done as soon as we can. If we could do it within a day, we will, but we'll do our hardest best to do all that stuff. Okay. Okay, I think that's a wrap up now. Again, here's the offers here. It's $99 a year right now, limited time. I apologize for this webinar being long. I understand it's long, but I wanted to make sure we went through everything. We showed you a lot of live charts and how to use this to become successful. Okay, that's it. The recording will be available by tomorrow. Please give us some time to sit there and convert everything. Everyone that registered for this webinar will get the recording, and we'll blast it out to you guys. You don't need to send us an email. We'll send it out to you. If you don't get it by tomorrow, by 12 p.m. At noon Eastern Standard Time, then you can ping us at info@eiicapital.com. Okay, that's it. Have a good morning or good evening wherever you're at in the time zones. Thank you.